Alrighty, traders, welcome to the AAA session here once again on this beautiful Monday afternoon. Here in Florida, it is for me, but of course my co-host, it may be in a different place, may not be as sunny there. But welcome to the session. We've got a bunch of things we're going to talk about in today's session. Firstly, of course, we're going to cover some stock options. We're going to talk about that, exactly what's moving the market in the stock side. We're going to talk about the currency pairs we focused on last week. Both Tyson, myself, and Chris have got currency pairs we're going to be talking about as well. And then we're going to also talk about the US election. We're going to throw in Brexit into the mix of things because there's a lot of things happening as we head closer to the 15th of this month that a decision needs to be made, a deal needs to be put on the table for the European Union as well as, of course, the UK. That'll be discussed as well in the third segment of this 30-minute session that we're going to have today. Hopefully everyone is good. Don't forget to subscribe to the channel if you haven't subscribed. Go ahead and smash the like button and also comment on the video as well. We also have a chat available. So if you want to go ahead and throw some questions in the chat, we are going to be addressing the chat. I know Chris moderates most of the conversation going through there. So we'll go ahead and moderate it, take a look and see what the chat's doing, and answer some questions that come through the chat as well. So with all that being said, let's go ahead and get to the co-hosts. But before we do that, let's go ahead and get the legal side out of the way first. Alrighty. Well, welcome back, guys, and good to see everyone in the room. The room's just starting to load up again. Fantastic. We're getting a lot of people coming into the room as we start the session today. And we're going to go ahead and jump straight into it. So let me introduce Chris and Tyson today. They're going to be talking about a bunch of things that you guys need to go ahead and take notes on, as well as I'm going to be discussing a couple of things as well along the way too. So with that being said, Chris, good morning. Or at least good afternoon, and Tyson, good afternoon.
How you doing, Gary? Happy Monday, everybody.
Fantastic, guys. Well, let's go ahead and jump into the meat and potatoes of the things we're going to discuss today, and that is, of course, I know both you and Chris, you and Tyson have got a lot to talk about today around stocks. So let me go ahead and hand it over to Chris. You go ahead and lead us, and then Tyson, I'll need to hear from you as well. Absolutely, you're the guru when it comes to stocks. We want to hear from you too. So let's go ahead and talk about stocks.
Sure, I'll kick it off. I mean, last week the markets were crazy up. We had, I think, 3% on both the Dow, the S&P, and the NASDAQ is over 4%. Bitcoin's running up to 11,000 plus. There's another kind of hopes on stimulus package, which we've got, 2.6 passed by the House, now down to 2.2, 1.8 agreed upon by the White House and the Senate, but is there going to be a compromise? I mean, the market seems to be just hoping that there's a round two stimulus package. The optimism grows. The markets today are, picking up right where they left off. So the SPY is positive, the Dow is positive, the NASDAQ is positive, volatility's down. So it seems to be very much risk on. We're seeing a weaker dollar, weaker yen. Risk on pairs are doing well. One thing I want to watch this week, Gary, for currency pairs, Tyson, same thing. We talked about this before we started live, is the pound crosses. Everything in the UK is up in the air with this, October 15th deadline for the UK and the European Union. But also the UK has taken some pretty strict measures with curfews and lockdowns, but the pound still remains pretty stable in price as far as the Forex is concerned. So I am looking for some short-term volatility and day-to-day trading in the pound crosses. I don't know exactly what we're going to get on October 15th, which is this Thursday. So if it's something we can look for the London session, maybe look for some day-to-day price action, maybe see if it's nothing really happens until the 15th, and then we trade great trade on Thursday, great trade Friday, and just hopefully carry that momentum into next week, and it just kind of blends in with we're 20, just over 20 days away from the U.S. election. We have SCOTUS confirmation this week. We have markets on optimism for COVID, COVID stimulus packages. We have the path of least resistance. We there's so much that's just brewing. But all I'm going to keep saying is the path of least resistance is bullish. The markets stay bullish. The optimism is high. I'm not willing to fight that right now. Something's going to have to derail that. And I know we can talk about election stuff in a little bit, but I actually read an interesting article where these simulations were ran, and 80 out of 100 simulations actually had Biden becoming the president. So, and that's algorithmic. That's not opinion based. That's just kind of how things stack up with the popular vote and the Electoral College. So I thought that was interesting that 80+% of these simulations are predicting Biden. But I also recall back in 2016 when everyone thought Hillary Clinton was a shoo-in, and that certainly didn't work out. So I'm not believing anything until it's election night, election week, election month, and I know that all of us are going to be doing that special event that entire week, which I'm looking forward to.
Absolutely. Now, Tyson, add to that. What are we looking at? What's really on your radar regarding stocks?
Yeah, I love what Chris just said, the path of least resistance. However, saying that, I'm going to throw a curveball because the SPY, the S&P, has been absolutely rallying because the path of least resistance has been up to 352 to 355 in the SPY. Exactly where we're at right now, which is exact resistance. So I said this last week. I like taking – kind of took a breath last week as far as I didn't want to get too aggressive on a bearish side. I like actually starting to leg into some puts on the bear side. I don't want to go blindly short the market because that's a way to lose a lot of money. We've got a century or longer telling us the market rallies up. So don't go short, but you can pick your spots when it comes to options. And I like buying puts. Puts are fairly inexpensive right now, considering the event risk that are coming along. And with the SPY where it's sitting right at a level of supply, right near the all-time highs with a lot of event risk. Premiums aren't that expensive. I've got a trade that what I'll do is after this session, I'll share it to Smart Trader. It's going to be in the SPY, but it's essentially looking at the March, going out to March. So trying to encapsulate everything that's happening in the markets right now, encapsulate what's going to happen in Brexit and the election and new administration, potentially all of that, going out to March, the end of March, and buying at the money put. So the 352 puts. Just to give you guys a quick idea on that, you could buy those 352 puts for about $22 right now, which sounds like a lot, but it's not that much, relatively speaking, compared to other elections. But you can buy them for about $22, and my target on that is going to be at least $50. So I'm looking to that's more than 100% return, and I think we could actually get that 100% return. It could be by the end of November or sooner, depending on what happens. But I'm going to give myself all the way to March on these. What's interesting about this, though, is that we've got an historical reaction between October and March of an election year. So the month before and then, the X number of months afterwards. We've got a historical response in the market of about a 12 to 14% movement. And so I'm buying these puts for about 6%. So I'm giving myself an edge based on history. Plus we're sitting at resistance. And what I'll do is next week when we're talking, if the market starts to move down and those puts start to profit, what I'll do is I'll look for ways to add calls to kind of do a customized straddle to also help me hedge and lock in some profits. So I'll talk about that as the trade plays out. But I love what Chris said. He's right. The path of least resistance. I do believe that the path of least resistance right now is trading back down to support. So I would be looking for opportunities to buy puts or to structure short trades, risk off type of trades in the market right now.
Yeah, and we can see at the moment right now we're seeing a big rally in the stock market. S&P's up, everything's looking good. And of course we've had news coming out that Trump is now being approved for to do in-person rallies. So and that of course comes back down to the debate as well. There's debate this week as well that they talk about. I haven't heard any sort of change, but I believe it's still going to be a virtual debate. Is that am I right, or is there some news outside what I already know?
I'm not sure. As of last week, the commission canceled the debate entirely, virtual and in person. So unless that's back on the table this week for round 2, I'm not really sure. I'll have to look at that.
Yeah, I thought that Trump said he wasn't going to do the virtual debate.
Well, he wasn't going to do the virtual. I just thought with them now being cleared in that they brought that back. I guess I haven't got an update on that. So no debate at the moment. Okay, yeah, just check that out.
I've been completely wrong about the debates. I didn't think a debate was going to happen at all. So, I mean, I guess I'm the wrong person to ask about the debates, because I would have bet that debates were just not going to happen.
Yeah, just check out. I may have got my wires crossed there, but just to check it on. Just take a look at that, Chris, and see if there's.
I've got
anything.
October 15th here, Gary. Second presidential debate will be held at Adrian Arch Center for the Performing Arts, Miami, Florida. And Steve Scully, who is from C-SPAN Networks, will moderate. So as of right now, second presidential debate is going to be scheduled for the 15th, which is Thursday.
Okay, in person, right?
Yeah, I mean, as far as it seems, it looks like it's an in-person debate. Yeah, not virtual. And then the last one will be October 22nd, and that will be in Nashville, Tennessee. Yep. So
I saw something come across. I wasn't 100% certain. I didn't complete the reading, but perfect. Okay, good. So we're in. Now, with that being the case, could that be the reason why we've seen some rally in the stock market? I know that we've seen a downside move. There was an early bullish move in the dollar index. And let's go take a look at the dollar index and see how that's played out. But if I go to the dollar index right here and take a look at the chart, we can see that we do have a we're not seeing the chart right now, my bad. Let's go ahead and pull that up. There we go. So we're looking at the dollar index daily chart right here, and we did see a bearish move in last week, but this week started off with a slight bullish move, but then pulled back a little bit as we went into the U.S. trading session. Pulled back a little bit. Now we're looking a little indecision at the moment right now on the day. Overall, I must admit, and let's talk about this, right? Dollar index chart. I've already said that we can anticipate price going a little bit below. And knock around about 11,995 right here, and then turn around and head back up north. So I wouldn't be surprised if you see some further downside move in the dollar index and some continued stock market rally as we talk about risk on risk off appetite at the moment right now in the market. Tyson? What is your view on the dollar index chart right now? And does it change your views as to how you see the dollar moving?
Yeah, so I mean, this week in my trading room, we're positioned for more of a risk-off move. So I would look for the dollar to rally. I talked last week about the Aussie dollar position that I like to sell in. Been a little conservative on that as far as I was waiting for some price to rally up potentially to some supply levels or break below the prior week's low. We never broke below the prior week's low, and now we've rallied back into supply levels. So I actually really like the short side on the Aussie dollar here. But the Aussie dollar, listen, full disclosure, Aussie dollar has been anything but a fun trade for me over the last few months. So the one thing I would say is I think when it pays off, it's going to pay off greatly. My target is going to be down to, as I've been mentioning, 65, 66, 67. So there's plenty of room to the downside. But if we start to break above these recent highs we've been putting in, we could see that kind of last gasp rally for this rally could continue for a while. So don't fight it. I think it's a good shot. It's just like the stock market right now. I think the stock market, you've got a really low amount of risk to take a shot on the downside with puts or with short positions. But if you're wrong, get out of the trade, because we could see some short covering rallies and short squeezes and all that kind of stuff. So keep your stops fairly tight. And then once the trade starts to go in your favor, I think that there's a lot of profit potential in it. Let it, don't get too quick to pull the trade off. Be quick to pull the trade off if it's wrong, if that makes sense.
Right.
Yeah. Well, let's talk about this, Chris, right here. Let's move to because we are going to move from stocks now and talk about currencies. And so one of the pairs that we did talk about was the Aussie US dollar. Take a look at this chart, Chris, and give me your views on this, because I've gone ahead and drew in a nice little AB boundary right here. We saw price moving slightly higher above that level. And there was a bit of rejection of that resistance from the previous support right there. Dropped back down, but then came back and, completely violated the bearish candlestick formation we had right here. But now we've gone ahead and traded above that. Now, what I'm going to do here, Chris, is I'm going to put in a downward trend line from that high to that high, and take a look at what we've got right here. What do you think about this setup right here? Do you still think maybe continue bearish move, or do you see that this could be an upside move from that setup?
I think there's a couple ways that I'm looking to play this. I'm essentially looking at sell stop orders at recent lows because I want to make sure that I'm not just calling a random top in case this thing just drifts a little bit higher. Hey Gary, can you do me a favor on the lower line of your rising wedge? Can you extend that line? Because if we do go higher, I actually want traders to be aware of that as like the backside of the trend line. If we reject off of that, so I'd like to extend that out a little bit higher.
Okay.
See if you can grab that one there and extend it out. There you go. So if we have a rally that just for whatever reason we don't fail, we don't start pushing lower, and we come back and we retest the previous high, maybe even make a slightly higher high. You're using I believe a daily chart right now. If we have the daily chart or a weekly chart, and that makes a new high compared to that, that'd be the high back in August. If we make a new high, but we're sitting at obvious divergence on a daily or weekly chart, that's going to be where I look at the next spot to really get short on the Aussie dollar. So if it turns this week, fantastic. I'm looking at sell stop levels below. I actually had a trade in at 71.20 last week that I stopped out of at 72 and change, just because if I'm right, I'm right. If I'm wrong, I want to get out quickly, just like Tyson said. And I'll do the same thing. I'm looking at sell stop levels for a price that obeys. And if it drifts a little bit higher, that's fine. But I'm really having a hard time justifying why I would be long in the Aussie dollar right now. There's no way I'm going to be long in the Aussie dollar. I don't care. Honestly, I don't care if it goes from current price back to the highs at 74. I know that's 180 pips away, 190 pips away, but to me, it's more like I'd rather start getting short, start getting confirmed shorts, add to my winning positions, and take from 72 all the way down to 68. That's a 400 pip area versus 100 and some pip area to the upside. So I just think we're kind of patiently waiting for better confirmation on this pair. I think Gary's got great structure on his chart, but I'm just going to paint a couple of scenarios where in case it doesn't confirm right away, like now, we could potentially drift right back up to those highs, but use the backside of that rising wedge because I feel like that's a nice spot where, traders, of course, they have their stop losses above that high. So what does the market do? Comes back and tests that high, runs that high, and then we get the direction that we've been waiting for, which is the downside.
Yep.
Yeah. I would agree with you. I actually posted a chart on Friday, and I said, man, take a look at how the market retests the backside of this trend line right here. So what I did is I've already gone ahead and added in. I've got positions right here where I sold over here at the backside of the support here. But then I went ahead and said, if price does rally up again, if it comes back down to this trend line, I'm going to go ahead and add positions. So I already add positions right here. So I've got positions here, positions here. And I agree with you, Chris. I think this is overall going to be bearish to the downside. So what I'm doing here is I really want to see 71.91 broken. If we can trade below that, then I think we're on our way to the downside. At least go down to about this support right here, down at about 68.18. Now I've gone ahead and actually already deployed automation, and I've used a 15-minute time frame. I've got a little aggressive on this. And I used the 15-minute time frame, but we're not in the sell zone yet. If we go ahead and jump this to a 15 right here, you can see we're still not in the sell zone. These ribbons have to be below, at least the blue ribbon has to be below the red ribbon. Price also needs to be below that in order to get a sell signal. We're not there yet. I'm seeing an early confirmation that price is trading below the daily pivot point, which means that we may see a bit of a change in directional bias. But I'm currently right now add a position in short already. If it goes bearish again on the on my automation based on my right trader max, I'm going to be adding more positions in as we start chasing after that support level right here on the daily at 71.91 right here. So that's good. Now Tyson, I know you've spoken about Aussie JPY chart, right? Let's go to the daily on that. What is your update on this chart? As you spoke about last week's trading opportunity.
Yeah, it's actually very similar to the Aussie dollar. They all kind of fit within the kind of risk off parameters, kind of what's going on in the stock market also. I'm looking for a bearish push down. I really like today's price action. I think today's price action is great looking for what we need to have. This is the exact type of picture that needs to happen for a real push to start. I'm not going to say that this is the absolute start of a real push, but this is the picture that it looks like. And I actually think, to kind of keep this pretty simple, I think we could go and you could do a simple trade where I think a push down towards 72 is very realistic. And I think somebody could easily say bracket off last week's range. And so here's just a quick trade for somebody that's like, hey, I'm not in this trade. I like it. I want to get in. Here's one of the ways that you could do it. Last week's low was about 74.92. So you could look to sell on a break below 74.90. Put your stop above, because I don't think, and especially if we break below 74.90 before last week's highs broke, right? So last week's high was 76.50. So if we're able to break below 74.90 before we break above 76.50, then I like selling at 74.90, stop of 76.50, and a target of 72. I think that's a very clean, very clear trade.
I think 76.15 was the high.
Was it 76.15 last week?
Yeah, 76.15 looks like it is. These are the highs from last week's trading. Yeah.
Are we looking at the Aussie yen?
Aussie yen, yeah.
What am I looking at here? It was
looks
76.51. I've got last week. So that Friday's bar.
Right.
That blue bar right before today. Today is Monday, Gary.
Oh my gosh, you're so right, dude. My bad. You're right.
Let's blame it on COVID, right?
Yes. Let's blame it on COVID. Yeah. All right. So there it is.
Basically,
76.51.
what I would do, this would be the trade. I would put my stop at 76.60. I would short on a break below, and this is a conservative trade. Short on a break below 74.90. Target of 72. And what you're doing, so I think you could get into this. Let me say it this way. I actually think somebody could get into this trade before the 74.90 breaks, because you're like, geez, I got to wait 100 pips before I even get involved. I'll tell you this much. If price closes below, and I'm just going to give you cut today's bar in half. If price closes below 76.15, which is about 50% of the range of today's bar, I'm a seller. I'm basically a seller. As long as last week's highs hold, I'm a seller, and I think you can continue to sell down to 72.
Okay. All right. I like that play. I do see a bit of support coming off at 72.95, so that may be something that I'll be watching out for. Maybe early profit if I don't get to 72. But I like the downside move on this. And if I go to the chart right here on a 1 hour. 15 minutes already saying bearish. What I like about the 15-minute time frame is that we're seeing bearish confirmation already being confirmed right here, and we're getting that bearish candlestick formation on the daily. If we close out with that dark cloud cover, it may even be a complete engulfing of the previous day. So if we got that setting up on the daily, then this right here might be an opportunity for traders to go ahead and start deploying automation. Let's take a look at the 1 hour. And see if we've got a confirmation on the 1 hour. No, the 1 hour is not quite there yet, so we haven't got the 1 hour. But the 15-minute time frame may be the early turning point that some traders might be looking for. So, if you want to use automation to go ahead and trade that, I use Right Trader Max. I know Chris does use as well. There's other options as well. Tyson uses his tools. What system would you use, Tyson, if you were looking to deploy automation on a sell-only option here?
Yeah, this one's in a perfect spot to turn on something like Turning Point, because it's at a what I would define as an extreme high over the course of the last 10, 15 days. Big rally up, or pretty decent rally up into a level of supply. Turning Point, in fact, this week, rolling into this week, the Aussie yen is our top trade to sell, deploying Turning Point on.
Okay. All right. Perfect. Good. Chris, you had a pair that you were paying attention to last week, right? This Euro Swiss?
The Euro Swiss, yes.
And what's the update for traders this week on the Euro Swiss?
Yeah, if we bring up that chart, it's really the same situation we talked about last week. I did buy it at 107.50. I didn't close out. We had a high around 108.00, like right on the dot, but I had a chart alarm set at 108.20, so I never closed out for my plus 70. What I did instead is I just added another position at 107.50. So I had the position filled last week. I had another position that got filled this morning. Current price is 107.37, and as long as we don't make some big invalidation at 107.15 or lower, I'm just going to maintain the range, which we had a range since end of July. or mid-July. So I'm just going to look to hold the position at 107.50, see if we can have a nice little upward move this week of 108, 108.15. Since I have 2 small positions in, I'll just look to scalp those and take some profits. That'll be, you know, kind of 100 pips combined or more. And I'll just keep that level in mind. And, you know, traders that are with me in my flex trading room, they know long-term that I'm planning on the Euro Swiss to go to 110.50, 110.60. So I'm just kind of working that little range right now, taking some smaller trades, adding some positions, and then I'm going to get really aggressively bullish above 108.40 if we have a nice breakout on the daily candle.
So are you taking on some buy trades at the moment right now, taking on some small profits on the buy trades?
Yep. So buy trades are at 107.50. As if we get a chart alarm at 10800 or higher, I'll just take some profits. So last week I was talking about 108.15, 108.20. We didn't hit it last week, so I'll just take 50 pips. If I'm up 50 pips on that little range, I'll buy low, sell, you know, sell for some profit, and see what happens either above 108.40 or just get back in at 107.50 and keep working this range that we've had solid now for about 3 months.
Okay, all right, good stuff. And you're chasing after 110.
110.45 is the yearly pivot. 110.60 is the previous high from October of last year. So anything,
Perfect.
honestly, anything above 110, 1.10 or higher, I'm extremely happy with.
All right, fantastic. All right,
but
so
as it works its way up there, Chris, from what I've just gathered, you're just taking what you can get. You're buying low, selling high, buying low, selling high. So you might have 15 different positions or 15 trades up to that 110 level.
Sure. Yeah.
Excellent.
So what I'm doing right now is I'm just, like I said, I've been taking, this is my 5th trade now at 107.50. I have a base that I built up from the 107 to 105 area. My next real aggressive area is once we get a break above 108.40. I told traders last week you can use target trading to start buying every daily target. You can use Right Trader Max to start deploying with dynamic support on a 1, 5, 15-minute chart. You can use Momentum Breakout and use SSL Auto. Anything that's going to be a nice, nimble trend system, you know, having add-on positions. It's just I want to accumulate more positions as prices above 108.40. To me, price is finally cooperating and going bullish the way that I'm anticipating it to go. So rather than getting super heavy right now, you know, I'm buying small at 107.50, taking profit at 10800 or higher, and then once we break above 108.40, I will just be adding more. You know, there's the ways I mentioned earlier, like adding on targets, adding with an automation trend system, or you can just use buy stop levels and just put them like every 20 pips away, like, you know, 108.50, 108.70, 108.90. You can just stack those orders up, and you only get filled when price goes your way and gets you into those trades, and you have room all the way up to 110, all the way up to 110.50. So that's my plan, is, you know, to take that area. I mean, even if it's only, let's say we go to 110. If we only have 150 pip area to trade, but we can have, you know, 3 to 5 entries with high probability of price going our direction, you know, we can take 3 or 4 entries and walk away with 500 pips, and the market only goes 150 pips. Yeah. So that's really the plan, is like how to add to it and make sure that's a nice big winning trade.
I think what's also important right here, Chris, and I think you need to share with the students as well, is that you have a sort of a risk parameter, right? That you're only going to be risk, and I'm talking about percentage risk right here, not pip risk, but percentage risk of your account that you're going to allocate towards this trade, right? So it doesn't matter if you got 20 or 100 trades in, you're still going to limit it to a risk parameter that you're willing to take on that trade, whatever that number is, right?
Absolutely. So I mean, I'm looking. So a lot of times in my allocation, you know, I'm typically like a 1 to 3%. When I'm building a position, I'm looking like 1 to 3%, which I know that's a variance, but 1% is what I'd ideally be happy with as far as minimum drawdown. But I'm giving it the room of like a 3%, which for 3%, I'd have to get back below 105. For me to ever have a 3% drawdown, it'd have to go below the lows at 105. So, and I'll again, if I get there, then I'll worry about it when it gets there. But I think right now with this sideways move and the structure that we've all talked about, I can see the Euro Swiss going back up to 110 before we break below 105.
Yeah, and I also think it's important for the students to realize that when you're starting to stack positions on a currency pair, you can't go ahead and trade 15 currency pairs. You know, you've got to realize that if you trade 15 with a 3% risk, you're looking at 45% risk on your total portfolio. That's not the ideal situation you want to be at all. So what you want to do is, if you're going to be stacking on those trades, you may go and say my max risk on a trade is 1 to 3%, but I'm going to take on 3 or 4 positions. Then I'm looking at a maximum drawdown of anything between 12 and 15%, depending, of course, what how many positions you take on.
Not even at all what I'm talking about. Like my total, all my positions, 9 positions, is like a 3% drawdown maximum. So I'm talking
so you're
I'm
talking
taking
about
trade sizes that are so small and so conservative that my drawdown would be, 3% if we hit those lows. I'm not taking 1 to 3% per trade. I'm taking like fractions of 1% per trade.
no. You misunderstood what I said. I'm talking about per trade, meaning per currency pair. Like I'm considering that multiple trades is one trade in that particular currency pair.
Oh, right.
So
if I did 10 currency pairs across the board at 3% risk, stuff like, yeah, you're right. Yeah. So but just on the Euro Swiss, again, my total position size of that is really small.
And how many currency pairs are you focused on right now at the moment?
Right now, I've actually, so Aussie CAD I'm in, Euro Swiss I'm in, Dollar Swiss I'm in, Aussie Dollar I am getting back in Aussie Dollar. So I only have like let me check my summary here. I only have 4 positions total, like 4
Perfect.
currency pairs, I should say. So again, that's why I'm kind of nurturing a lot of those positions, because I'm only exposed on 4 currency pairs and managing that percent. Yep.
Right. So that comes to my point right now. So you're looking at 4 currency pairs, 3% max risk on these each pair. Looking at total risk on if all hell breaks loose, you're at 12% drawdown on your account. So and that's an acceptable level that you've decided on.
Sure.
Okay.
I mean, it's what I've dealt with. I mean, I can definitely handle, emotionally like 5%, 10%. I'm not going to lose it all at once, So I mean, even if I get a 10% drawdown, it's not coming out. It's like I will scale myself out. I will level out of some of those trades. I'll get back in. I mean, my losses would be single digits, and I would just plan on working through them. But you're right. Total exposure. If everything, like if all 4 currency pairs that I'm in are flash crashing against me, worst case scenario, I'd be down like 10%, but that'd be a drawdown that I'm working through and I'd be willing to manage. So again, that's, I talk through all this stuff, transparently in our trading rooms. And so traders know when I'm talking about add-on positions, kind of how we're building through things.
Yeah, and I think it's important for the viewers to realize that, when we talk about these add-on positions, it's important that you get into the trading rooms, because without getting into the trading rooms, then you're not really getting the details of exactly what the trade looks like and how we manage the position. Because it may sound, hey, I've got 20 positions in on this pair. It's like, what? You're over leveraged. Well, it's not quite going to be the case, because there's details about how we manage those positions. I do it, Tyson does it, Chris does it. We all do those type of strategies where we do add on positions and stack a position. But the most important thing is that we always keep equity management in mind with all our trades every time we're trading, that we don't reach these extreme over leveraged positions that we that are going to destroy your trading account. So very important that we talk about that. Now, I have 3, and I mentioned one of the viewers asked about the Euro JPY. So I've got 3 pairs that I want to look at. We spoke about the Aussie US dollar, so I'm going to delete that one. The other 2 is going to be Pound Aussie and Euro JPY. Let's go quickly take a look at that. I'd like to get Chris and Tyson's view on this as well. I'm going to move to the Euro JPY first. Take a look at the Euro JPY. We've got this big upside wedge happening right here, a big rising wedge right here, and we're starting to get a move to the downside. I already called this right here the sell zone. Let me go ahead and zoom in a little closer up here so everyone can see. So I called this sell zone in the trading room last week, and I'm sure Chris and Tyson, you guys might be on the same page on this one right here, but we got a downward AB boundary. We came back to retest this, and I mentioned to the traders that this wick right here is important, but so does the body here, because we know that this is where the bulls and bears are fighting it out, and when price trades above that level, we know that the bulls took control. So this is a very important, it's a battle zone right here. So when we get into this battle zone, and we see that price starting to close out with a nice bearish engulfing candle right here, this is super exciting for those that are selling on this. Now, this is just the starting point. For those that are not involved or have not got involved in the Euro JPY yet, this is a super cool trade opportunity right here, because when we have these rising wedges, price normally is very aggressive towards at least the lows down here, and that's around about 122.40. So we should be seeing a very aggressive move to the downside. I'm not telling you to jump in straight away. You stick to your game plan, stick to your strategy that you trade, right? But what I am saying here is that there's an opportunity. Now, whether you use automation like Chris mentioned and Tyson mentioned about Tuning Point and Right Trader Max and SSL and all this good stuff that you want to go ahead and use to trade, go ahead and use that and allow the system to be bearish only for right now on Euro JPY, because that is where the dominant direction is on this particular pair right here. This is the Euro JPY. So just quick update on that. Then the other one, I'm going to go ahead and I'm going to give Tyson and Chris a chance to share their views. But the other one is the pound Aussie. Now, you probably know I've been in this trade for a long time, and I've been adding in, just like Chris does, stacking in on this position. I've been stacking in at the support right here, and we're starting to get a nice little rally to the upside. I definitely want to see, if you're in the pound Aussie, and I'm in right now, I'm in the money on some of my accounts, some of them are just slightly down, but I'm really looking for a break of 181.33. If I can get a break of that level on a daily candle, it gives me some upside action towards 8,400. So if you're in this position, and trust me, I've been in this position, and I've already gone and cashed in at this level right here. Cashed in, not only did I cash in here, I cashed in here. I've added new positions over here. I've added new positions over here. I'm looking to possibly cash out over here if we don't break above there. But if we break above 81.34, I think 8,400 is going to come into play. So that's my 2 cents on this particular pair. I'm excited about these two pairs, Euro JPY and Pound Aussie. Chris, Tyson, I'm going to go to Tyson first. Tyson, what are your views on this?
Yeah, it's actually exactly what I set up in my trading room last Friday. I've got a buy on the Pound Aussie. Looking for, I'm going to buy two places. I've got it spelt out exactly like this, typed out, shared with my students. I said, look to buy on a break above.
Make sure, traders, you take notes right here, because Tyson's going to give you information about exactly what he did on this trade. So grab a pen and paper right now and write this down. Go for it, Tyson.
So this is the exact typing that we did in my trading room. It says this verbatim. Look to buy on a break above 81.68. Also look to buy at 77.85. So if we break above, just like you have it, we break above, I want to buy. We come back down into those 77.85 level right in there. I want to buy. I've got 2 targets. These are longer term targets, so we'll manage it on the way up. But target number 1, 85.33. Target number 2, 89.10, and my stop is at 76.30. So if I get into both buy positions, and let's say we hit my larger target to 89, I'm looking for about 950 pips worth of reward, and I've got about 320 pips worth of risk. And some people out there might be like, oh, 320 pips, Tyson, that's crazy. Well, again, it's all relative, right? It's all based upon what am I looking to overall, what am I looking to make in comparison to risk? And for my appetite, this fits perfectly within my reward to risk appetite. So I love the trade. We're almost speaking the exact same language, Gary. It looks very, very similar to what I'm looking to do in comparison to what you had on your charts.
I think what's important about what you said there, and I think the viewers need to pay attention to this, right? You gave your stop loss. Where's the stop loss? It's 76 and change, right?
76.30.
76.30. Now, your entry point, you said, of trading above, you're going to be bullish above what level?
So break above 81.68 or a sell-off down to 77.85.
Okay. So what Tyson's really given in his buy and his stop level is basically saying that, hey, this is my range. Now, what you can do is you can go ahead and use any automation, any sort of trading strategy you want. You don't have to trade exactly like Tyson trades. You don't have to enter where Tyson enters. But what you can do is you can take the range that Tyson said. Now, his stop loss is basically saying all buys are off the table. When it gets to his stop loss, that's it. He's heading south. So which means that you're going to be doing buy-only options in that range so that when price trades below his stop loss, you know that's it. Start cutting your losses, get out of that trade, start looking to reverse it. That's how I see it, because a lot of traders, and you guys can comment, Chris, in your trading room as well, a lot of traders think that they have to do just exactly what we do, but everyone's got different trading accounts, different size trading accounts. They are more comfortable with a different type of strategy. But what's important is when you talk about the Euro Swiss, and Tyson talks about the Aussie JPY and these type of trades and the Pound Aussie like I spoke about, what we're doing is we're really just giving them an idea of what our range looks like as what we're doing, where we're looking to buy, where we're looking to cut our losses on the buys and looking to change direction on that trade. So when they look at those ranges and they take that information into account, they can simply go ahead and trade whatever strategy they prefer, but trade in that direction, because what we're doing is we're giving them directional bias and we're telling them, hey, listen, at this level, that's it, buys are off the table. So I think it's important that the information that you've just given them, Tyson, is really helping them to be able to say, hey, if I don't know what to trade right now, this is giving me some sort of idea what I need to do.
And not only that, but to take it one step further, 100% of what you said is absolutely correct. And if you really want to follow along with kind of my exact mindset, and really what Gary's saying too, is I wouldn't turn on any strategy at this minute. What I would do is let the market prove itself to you. Either it's going to trade down into those demand levels at 77.85, turn your buy strategies on at that point, or it's going to break above 81.68, turn your buy strategies on there. For now, some traders have a hard time with, especially new traders. Sometimes sitting on your hands and doing nothing is the best thing to do. I think we could float around in this range for a little while. I don't want to get chopped up. I'm going to let it prove itself to the upside or the downside for me, and then I'm going to turn my strategies on. But you're right. It's understanding our game plan, understanding what we're going to do, and then traders have to make a decision on, okay, yep, let's say you agree with what we're saying. Doesn't mean you have to trade it exactly like us. You just need to know, here's our parameters. You can go out there and deploy any strategy you want. Just know that this is the way that we're trading it. Once I break below 76.30, hopefully that doesn't happen, I'm going to turn the buy strategies off, and I'm going to reanalyze the trade and figure out what I need to do next.
Yeah. And this is what it's going to look like visually, right? And this is what Tyson, Chris, and myself are doing in our trading rooms. We're giving, if you take a look over here, this is the pound Aussie dollar right here. You can see there, we're talking about a bullish direction, buy at support, different type of approaches to how you're going to trade that. We updated it last week on the 7th. We said buy above support at 78.38. Support at internal fourth wave test, which means that we did a manual add-on to that. So which means if we go to the chart right here, as price came back to retest this level, this is where we're buying in, going long. So this is the type of information that is being passed on to you students with inside the trading rooms. And so this is so important, vitally important, that you get into the trading rooms, get the details of what's going on, so that you can follow along and do exactly what what has been recommended on those pairs. All right, good. Guys, let's just, we're a lot over our time. I did a bad job as a moderator here, but the thing, I think it was great conversation, but I think what we need to talk about, I'm going to give Chris a chance on this, is Brexit and the US elections. Let's go ahead conversation around that as we get a lot more deep into these conversations in the next couple of weeks as we head towards the election. What is the news on the horizon right now that we need to pay attention to, and what's happening to the market based on Brexit and, of course, the U.S. election?
Well, I think that I'll just take one segment at a time. Let's talk the European Union and the UK. I think right now you have the popular sentiment is going against what might happen. I mean, Boris Johnson wants to have a pretty firm stance against the European Union on trade negotiations. And right now, the majority of voters are saying, like, look, we shouldn't just leave the European Union without having some type of trade deal. So, again, this goes a lot back to what we've seen the last couple of years, which is we have these looming deadlines. And price has already made this crazy move, right? Back in September, all the pound pairs got super weak. And from that point, they've spent the last probably month just clawing their way back to where those breakouts happened. So my thoughts on trading the pounds this week is I was going to ask you guys, so I like the outlook and I agree with the outlook on pound Aussie, but do you have a unanimous basket outlook on the pound? I mean, do you see the same direction across the board? Because I think that the pound basket is one, it's like we're probably not going to have pound Aussie go one way, pound New Zealand go the opposite way. Like the pound pairs are probably going to move together. I mean, that's what we see with Brexit related stuff.
Let's go pop up the daily chart.
Yeah, to a point though, Chris, I have a different opinion on the Aussie dollar. So I don't think so. For example, I don't think the pound is going to rally aggressively against the dollar.
I would agree, but like pound Aussie, pound New Zealand would be similar. Pound
yes,
yen,
the risk on pairs, absolutely.
Yeah. So if I were to kind of clump them together, I'd say pound Aussie, pound CAD, pound New Zealand will probably move similar direction wise. Euro pound, pound Swiss will move in an inverse correlation. Pound yen, pound dollar, that could be the tough one because we could see a stronger dollar, stronger yen, and a stronger pound, and those become the tougher trades. So I think the focus this week, I will probably bring this into the trading room for me. Pound Aussie, pound CAD, pound New Zealand will probably be the three that I focus on because if we have stronger pound, it will probably shine brighter than the Aussie, the CAD, and the New Zealand, which will give us the gains. If it's pound weakness, and we have risk appetite, then again, the pound will be like kind of that exploited weakness. So probably just the 3 also. I mean, the pounds are more expensive margin wise. And I really like the structure on pound CAD. If we stay below 7,200, I want to see the pound CAD sell off. When we close above 7,200, I think that's a great trade to be long. So anyway, back to this week. Like look, all this could be discussed, and we could be like prepping and waiting for October 15th, and it could be a big dud, right? Like nothing really happens, and then we just have to sit on our hands for another 15 to 20 days until it's U.S. election time, and just kind of all blends together. But part of it's like the market's already made this aggressive move in September that now is kind of back to break even. So I don't really know what the plan is for the market. Other than I want to watch those 3 currency pairs. I think the basket is always important on the pound crosses. For the last several weeks now, I've been suggesting to traders that here's a really easy way to trade the pounds. It's day-to-day exposure. It's a London breakout with my little 5-minute price action. That's kind of my special version of it. It's a really easy way to not have to be directionally biased. It's a really easy way to get some good volatility intraday, and when it pays out, it usually pays 30 to 50 pips. When you have a great day and it's a for-profit stop loss, it could pay you 100 plus pips. Obviously, we need to see some day-to-day volatility. So, when a currency strength chart is not moving a lot, it's probably not the best time to be scalping for the day. But again, it's something as easy, Gary, as, in trading rooms, we use these resources all the time going into our, we have the histogram that shows all of our currency strength. We have websites we use that show the real-time data. So, I mean, if we see the pound cross is really making a move for strength or weakness, then that's an easy way for us to kind of get the green light to look to trade. I'm going to be more short-term oriented on the pound crosses. I'm not making any big claims or big predictions. And that to me is going to keep me kind of on this as a safe spectator that's like wanting to get in, but also, making sure I have the right confirmation and the right way to get in and get out without having to be, position trading. Make sense?
Yep.
I agree 100%. I think to back that up, I don't think making some big proclamation on the pound is smart for any trader right now. I am more apt to make a proclamation on the Aussie being overbought.
Yeah.
Is the idea with the pound Aussie long and the Aussie dollar short, the Aussie yen short it's not necessarily I'm super bullish on the dollar or the yen or super bullish on the pound. It's more the Aussie's just overbought.
Sure.
Yeah,
I agree.
Yeah. All right. So quickly, Tyson, I'm going to let you finish off, and then before we close, what is your views about Brexit and the dollar this week as we heading into the electional period, and as well as the decision on Wednesday?
Yeah, I think it's everything we talked about. I think I want traders to be nimble, to change their stances, make sure you're trading with stops. But one way that I'm really focusing on in my manual analysis is having, so for example, that pound Aussie trade is a perfect example of where I'm going to let the market prove itself to me. I'm not going to be super aggressive on trying to enter right now, either until it moves down into a very key, like this is a demand level. We're sitting at an absolute, very clear low price. It's now time to start buying, or it starts to prove on the way up. What that requires is it requires patience. So what I'm saying is this: do your homework, put the time and the energy up front, and then just be prepared to kind of wait for the trades to either come to you or prove itself to you, one or the other. And if you do that and you keep your stops pretty tight and you're nimble enough to change your stance, you should be able to generate a lot of income in this environment. And as you said, I think one of the easiest ways to do it is to let the market prove itself to you and then get out of your own way. For me, I've got to let the market prove itself to me. Pound Aussie as an example, let's say it breaks above. Instead of me trying to manage it, why not just turn on a really nice automated strategy to buy only up to my certain levels and just let it do its thing? That's the easier way to do it.
Yeah, I agree with you. All right, guys. Well, thank you very much. Appreciate the conversation today. I think we definitely got through a lot today. What we are going to continue with the conversation is going to be the U.S. election next week. So make sure you guys are back again on the Monday. We're going to talk about also the event coming up as well, the presidential election event coming up on the 2nd, 3rd, and the 4th of November. Huge. It's going to be absolutely a killer week of trading. We're going to take a look and see exactly what happens in that period. We're going to talk next week about what happened in 2016, how the markets reacted, and how we're going to go ahead and start positioning ourselves this year as things start taking place on the 3rd of November. So with that being said, guys, appreciate you, Chris. Thank you, Tyson. Also appreciate you as well in the insight that you guys shared today. We'll go ahead and cover this again to the same. We'll do the same sort of format next week as well, but focus more on the U.S. election. So with that being said, have a great week of trading, traders. And if you're not inside the trading rooms, you may want to go ahead and contact your account rep, get into the trading rooms so we can get some more information out to you about trading opportunities this week. With that being said, have a fantastic week of trading. From the team, cheerio.